Okay. So, hey guys, welcome back to our own thing, TradFi and Bitcoin Club. So, in today's session, we will discuss basically the updates on strategy, like what's happening in the MSTR, their rating. Recently, they have got rating from S&P, and let's just deep dive into like what's happening in this space. So yeah, before going into it, I hope my screen is visible.
Yeah,
Yeah, if someone, okay, great. So as you can see here, strategy has got B minus credit rating, like issuer credit rating. So maybe their products which they are issuing, that prefs, they will be treated as B minus. In the recent STRE investor presentation, they have, I think, did some math, like what's the current market which they are able to, no, it's in Q2, I think, Q3, sorry. So yeah, because today it will be more about like discussing what's like how S&P has given the rating, and is it good, like is it fair basically, is the rating, is the method used by S&P is fair or not? That's the that's the main question here. So yeah, let's let's uh, let's start. Just a minute. I am figuring out this one. So I was talking about the B minus credit rating which they have got from S&P 500, and this, yeah, this slide. I hope my right, like yeah, screen visible is right. So as you can see here, expanding access to global corporate credit. So before, when they were unrated, they were able to tap into this $2.8 trillion market. But now, because they have been rated, now they have an increased access to this 5 trillion, nearly 5 trillion of capital. So now they can access this 2.8 plus 5, so nearly around 8 trillion or 7.7 trillion kind of market. So yeah, this thing is good from their side of things. And now let's go into like how they have, like how S&P has issued this credit rating. So basically, before going into this, me and Amol were having a private chat about like how regulators lag and innovators lead. So this thing is playing out here as well. So I mean, this has played out in whole this Bitcoin ecosystem. So regulators in general lag. So now, like S&P has rated, but these ratings are like these ratings are done based on previously determined methods which they have. So because of that, like the strategy has been given B minus. So like they will have to adopt going forward into the future, and let's see how do they adopt, and what changes do they make. Like you might be aware of FASB, fair market value thing. So what happened in FASB FMV was, like before this rule, every Bitcoin holding company has to report its Bitcoin on historical cost basis, or lower, like historical cost or lower, like for example, if Bitcoin went from 69K to like 15K, then strategy has to report their Bitcoins at 15K before this FASB fair market value thing happened. But after the fair market value thing happened, what they did is like they can now report Bitcoins at fair market value, like whatever Bitcoin's price is going on right now. So similar thing has been played out in this rating thing as well. So just to mark some important things here, as you know, MSTR like strategy has been like their leverage ratio is too less. Like for example, they have around. Let us go and check it live. So if we go in credit, as you can see here, they have $8.2 billion in convertibles, and most of them, like around, I can see, if I can see here, let me just, yeah. So in that, I think, yeah. So as you can see here, the conversion price of this converts here is 183, 672, 149, 433, 232, 204. So nearly except this 433 and 672, rest converts are in the money. And MSTR is now trading at around maybe 1.2 or 1.3 times MNAV, 1.23 times MNAV. So most probably, like the first convert which is going to convert is in 2028, and by the time I think most probably it will convert. I don't see any risk of this convert, like of not getting converted into equity. The next convert is in 2029. So here this conversion price is 672. So this thing is as of now it's out of the money, but by 2029, if we go by power law or anything, uh, they will be like good place to get this thing to be converted as well. So I don't see these converts as a risk, or maybe even if one of the converts is not converted, they can maybe raise some straight debt or something and pay back the initial principal to them, but most probably this is going to get converted. Now in this article, how they have done is like, um, as you can see here, we believe company's negative total adjusted capital is significant ratings constraint based on our treatment of its Bitcoin assets in our calculation of risk adjusted capital. Now, this is very important. Like, if you want to understand how they have rated, so risk adjusted capital, what they have done in this risk adjusted capital is like they have deducted Bitcoin NAV from the book value of equity, and like this is not as a Bitcoin investor, or as a Bitcoiner, this doesn't make sense to me personally, but these things are like regulations. These regulatory bodies take time to update, and as of now they see Bitcoin on balance sheet as risk, so that's why they have deducted whole amount of Bitcoin uh, as a risk. For I have done some run some math for you guys. Let me just change the screen, and I will go to that this thing. So I have run some rough math here. So if you have seen the wordings wherein they have mentioned this RAC thing. So what does RAC mean is like, RAC is basically risk adjusted capital, and the formula for that is adjusted capital by risk weighted assets. Now, what is adjusted capital? So adjusted capital is here. Basically, adjusted capital is nothing but like book value of equity minus uh, it's adjusted, like what do you think as risk. So um, in risk they have deducted this BTC NAV. So when you deduct BTC NAV from book value of equity, as of now book value of equity is 59.27. Before going to like this 59.27, come here, book value of equities formula is total assets minus total liabilities. So what is total assets? In case of strategy, mainly their total assets is their Bitcoin NAV and their market cap. So what I have done is here, I have like their market value of equity comes under total assets, and I have deducted their debt, their interest costs, and their dividend cost as total liabilities. So when this number so if you go and check what is the market value of MSTR, it's nearly $68 billion. And when you deduct this debt, interest cost and dividends, this is around 0.73 million. So the answer comes to 59.27 billion. Now this is basically book value of equity. Now from this book value of equity, you have to calculate adjusted capital. To calculate adjusted capital, you have to further deduct this Bitcoin NAV from book value of equity. So when you deduct Bitcoin currently, for those who don't know what is BTC NAV, BTC NAV is basically total number of bitcoins into the dollar amount. That is Bitcoin NAV. So Bitcoin NAV is currently around $67 billion for strategy, and their book value of equity is 59.27. So their adjusted capital comes negative 7.7 billion. So when you calculate RAC, like their risk adjusted capital, because the numerator is negative here, and the risk weighted assets, again they consider Bitcoin as risk weighted asset in the denominator, and when you do this thing, when you calculate this thing, this comes out to be negative. And because of this is basically the crux, like because of this they have uh, allocated strategy as this B minus rating. So let me
I
just
also
go
had one
back to our,
question.
yeah,
Amdab, sorry, you have deducted BTC NAV from which value? The total equity value,
book value of equity.
book value of equity, and you have divided that
Yeah,
whole number with what? The amount of debt available with the company.
just a minute. Yeah. No, it's risk weighted assets. So they are taking Bitcoin as a risk. So you have to calculate Bitcoin in the denominator as well,
Okay,
not
and
debt.
how do you calculate risk-weighted assets? 67, where did that come from?
It's BTC NAV. Like,
Okay, it's okay. Risk-weighted asset is BTC NAV.
yeah,
Got it.
because
Uh,
seeing Bitcoin as risk.
okay, okay,
Yeah.
got it.
Feneng,
Okay.
do you want to
Yeah, a
speak?
quick question actually. I don't know if you went through, I don't exactly know how S&P does ratings, but I have a brief
Yeah.
idea of how Moody's does it, right?
Okay.
What you typically do is, you look at ratios like PE ratio, DE ratio, debt to equity ratio, EBITDA to interest, EBIT to interest coverage ratio, and stuff like that, right? And
Mm-hmm.
usually they are weights determine. I mean, certain industries, certain ratios matter a little more and have a bigger weight, and then
Yeah.
and certain factors have different weights based off sectors, and then
Yeah.
then you bring them together through a weighted average, and then you also usually have a qualitative factor, based off governance and stuff like that, that you quantify and add in some way, and then you arrive at a rating. And
Mm.
I'm wondering if S&P does something similar. But what I really want to get down to is, what kind of a company is this being treated as, and based off which S&P kind of adopts the methodology or the template. So I'm curious
So
to
in the,
know if this
yeah.
is being treated like a financial services company, is this being treated like a oil treasury company, or I'm wondering, how was the uh, valuation metrics, or what kind of sector
Yeah,
classification has it got?
yeah, exactly. So I also want to add a question. So the book value, so basically it's tangible assets. So book value of equity has to, so it is a company, it doesn't have any, it's a, software company. So how does that valuation actually come from for the book value of equity? Because it has to be tangible assets.
So here they have not mentioned about like what exactly the RAC ratio which they have got, but from my personal understanding, this is what I have arrived at here. But if Alok, as you mentioned about Bitcoin is intangible asset, and that will take this ratio to much higher negative levels. I wanted to just to like give you guys the idea like how this RAC is calculated and why they have deducted Bitcoin as risk. On finance question, so here if you can see strategy treasury, they have if you can see our ratings on strategy incorporate our view of the company's narrow business focus, high Bitcoin concentration. So this is like this is the para where they are talking about our ratings on strategy incorporate our view of the company's narrow business focus. So basically they are also valuing some business, high Bitcoin concentration, low US dollar liquidity, and very weak risk adjusted capital offset only partially by strategy strong access to capital markets and prudent management of its capital structure. So I think this says that they are valuing strategy on maybe high Bitcoin concentration.
Sure.
But here they have mentioned it's a Bitcoin Treasury company that uses proceeds from the issuance of equity and debt.
So, Finning, so is there any, is there a new rule made for these VDAs for Moody's and FinTech and S&P for especially calculating the value for the companies?
Yeah, usually yes, there is a transparent rule book. So, like in fact, sector classification of a MicroStrategy will basically be based on the S&P, ratings that will determine the sector, and based on the sector, a specific, the methodology will be made quite transparent because they want people to know where it comes from. They want
Okay.
that adds trust to the system. But what
Oh, okay. So
happens
no,
here is, however, there is
no
still a,
new.
like I said, there is a qualitative aspect, okay, which where they do play around with. So,
Okay. So,
in
but
some
if
way, they're giving you an impression that methodology is transparent, but there's still like behind scenes, there is still a qualitative aspect which or subjectivity which they still hold. Uh,
okay.
so you know what I'm saying?
So they are not classified. So because they are classified commodity, not all the rules for commodity apply to them, or some new rules are made for especially digital assets which are tokenized as commodities.
No, no. So this is strategies rating, right? They are out there to rate issuers. Issuers are basically companies which are issuing debt. That's why strategy gets rated by S&P 500.
Yeah, that's what I'm saying. Yeah, so because no, but the balance which the companies hold, that's what I'm saying. The classification done, is it applied? So basically, when it comes to commodities, all the rules will apply for the company holding the commodity, or a special rule is made for especially digital commodities which have been come in around 2019 or 2021 to make sure that the valuation is perfect.
No, this is not a rating on the commodity at all, right? You issue a rating on ExxonMobil. You don't issue a rating on crude, the crude oil.
No, no, I got your. I'm just okay. I'm not explaining it properly. So basically, what I'm saying is the company's holding the asset, whichever it is, the category it comes into. So this comes into commodity, right? Bitcoin. So when they make that rating for the company, how do they classify the commodity? So is Bitcoin put into the commodity asset and that's it? The valuation is made for the company, or a new rule is made for digital assets when it comes to
Yes.
com. Okay.
Yeah, I agree. So it'll be interesting to find out what is the classification of strategy in by S&P, whether it's financial services or IT,
I
right?
think they have classified it as financial because you can see here criteria for financial institutions like there in the related
Yeah.
criteria section. Most of the things they have mentioned is financial institution kind of a thing.
Correct. So, and then as a financial institution, you play around with all kinds of assets, right? You can play around with money, which is least risk weighted, and it can go all the way till bonds, long term bonds, which are slightly higher rated. You could also, get your, you can also have put that in Bitcoin, which is probably the highest on the risk weighting spectrum for them.
Yeah. So I did some chat GPT as well, and in the risk weighted stuff, they have also tried to include their traditional IT assets as well, but it is too small to consider.
Yeah,
So
exactly.
that's
So that's
why
what my
I,
question was. So if you take
yeah.
ExxonMobil, they are doing commodity. So they are basically playing with crude oil, which is a commodity, and this they are and strategy is doing the same thing with Bitcoin, which is also a commodity. That's why I'm like, how does it come into a financial asset thing? That was my. So how did they classify it exactly?
I mean, Palok, it can be a little different between the two, right? Because oil never got financialized. What Michael Saylor is trying to do with strategy is financialize Bitcoin, a bit more like how gold got financialized and how money is financialized, right? Oil, nobody went on to issue bonds on oil. Michael Saylor is basically issuing bonds on Bitcoin, right, to people. So in some way, a financialization has happened. So it's a little different from the.
Yeah, yeah, exactly. That was my doubt about it. Yeah.
Yeah,
So
that's why
still we
this
have done.
is aligned and goes on to become a financial services company. Though I don't know, I wouldn't have been surprised if it was still kept as IT, right? Or I don't know.
Yeah, yeah. And we can go ahead. Yeah, sure.
Yeah. So basically, Apollo, I want to add on your like question. Uh, so they are considering Bitcoin as a risk in their balance sheet and not as a like as an maybe a bond or like which Fineng was mentioning. Bond is like AAA rating. So that is not the case here. They are considering Bitcoin as a risk, and also when I was doing ChatGPT, I saw some IT business, but it was irrelevant in calculations. Like it didn't like it moves by points. So because of like total number of bitcoins is too high when compared to their IT business.
Yeah, but but if it's a commodity, it's a tangible asset. So they should that rule should apply. So if a company goes bust, they can always sell the petroleum. So it should not be an liability. That's what my again. It's my own questions. You
Uh-huh.
can go ahead.
So that's what I am saying. Like because Bitcoin is a commodity and it's like highly 24/7 liquid market. So why they have deducted? Like why they have considered Bitcoin as a risk? I didn't get that. So
It's the volatility I
it's
am
true.
that. It's the volatility.
Yeah. Yeah. Volatility. True. Volatility.
Yeah, so the petroleum also volatile. So that's what my question. Why different
I
classification for
think
commodities themselves?
we don't have an answer for it right now, so just repeating that question will not help anyone.
Yeah, that's why I said, Amitabh, you can go ahead. Yeah, that will always come ahead with every topic we discuss with commodity.
And I mean, just to
One
draw the
thing
line,
which
right?
I
Commodities, gold is commodity, and whatever Bitcoin is a commodity, but they are different, right? Not all commodities go on to become money, right? Some of them do. Precious metals and whatever. Bitcoin now is probably the ones which have had some success, right? All the others did not last as money for did not go on to become money. So that's again that is one of the reasons.
yeah. So my yeah, yeah. So coming back to the article, this was the first point which I wanted to explain about RAC. The second point here is that like this thing, like the strategy also creates inherent currency mismatch. The company has long Bitcoin position and short US dollar position. Basically, debt maturities, interest on company's debt, and dividends on its prefs are in dollars, while strategy holds mostly Bitcoin. So this they have considered as a risk from their from their criteria, but this is the game which they are playing, like long Bitcoin and short dollar. This is the game of strategy and any Bitcoin treasury company. Now, next thing which I wanted to address is basically these two were the two main major things which I wanted to address in like their B minus rating. And this thing basically the other kinds of risks which they have mentioned is like the ratings also reflect the firm's lack of operating cash flow generation. So as we all know, the IT business is generating around 50 million per year, but as of now it's like maybe it's I mean it's funding their own operations, so any like no positive cash is coming out of their IT business. So this is a risk. I mean, if you want, like this is a true like when you compare it to RAC and this long long Bitcoin and short dollar, like this currency mismatch, these two I didn't get, like why they have, like this is their criteria, I absolutely agree, but in the long term maybe some rule change has to be done in these two criterias. But this third thing I agree, that the firm lacks cash flow and how they are going to pay the dividends and all. Now, then again, this currency mismatch comes here. The next point wherein they are talking about the company maintains strong access to capital market, but this could change in severe Bitcoin stress. So this is what we discussed. This is what Fineng has talked about in our earlier sessions, like who will demand strategy prefers in a Bitcoin bear market. So this is a true risk. Like they are getting how to value like how to rate strategy in this fourth whatever criteria you can say. So they have said like a strategy has a strong access to capital market, but how strong will they be in a scenario when Bitcoin goes into bear market? Now in this case we have to go, like we have to consider as like their how their preferreds turn out to be. Like if preferreds are doing good in bear market as well, then maybe we can think of like maybe this thing then have to be rethink by the S&P. As of now, if you can see to STRC here, STRC is at 100, is at $100 price, and Bitcoin is down from 126k to maybe 104.5. So as of now, the preferreds, like especially STRC, is doing as predicted, but we'll have to see how the correlation is with Bitcoin over time. If STRC remains at 100, then things are working, but if it doesn't remain at 100, then things are not working. Yeah. Now here somewhere in the article they have also talked about Michael Saylor talks about that he's not going to sell Bitcoin, and this is where they are seeing risk. uh, Before going to that risk, let's come to their liquidity risk in our view of companies convertible debt. I talked about this convertible debt kind of a thing. So out of $8 billion of converts, 5 billion is currently out of the money. So 3 billion is in the money and 5 billion is out of the money. But like the recent 2028 one is in the money, so we have fair amount of time to get all of these convertibles getting in the money. So this is a risk from their side, but not uh, basically not a risk for me or not a risk for a Bitcoiner, because we all know where Bitcoin will be in 2028 or 2029, and even if strategy trades at 1 times MNAV, this like the their conversion prices will most probably will hit like 183, 672, 149. This is not a concern. Next thing which they have talked, we see some liquidity risk from dividends owned on the company's preferred dividends. So as we all know, their convertible bond strategy had like 0% or near 0% interest cost, but their convertibles are having 10-12% per year interest cost. So per year they are having like around 640 million. uh, Now it's around 720 to 730, so you have to consider this as well, and some small interest cost of 35 million per year. So dividend cost can be paused, but yeah, when you are rating a company, then you have to also consider that they should not pause it. And here, somewhere here in the article, they have talked about Saylor has mentioned many times that he is not comfortable selling his Bitcoin position, but in some of his recent interviews, he has mentioned like in the worst case when companies MNAV is trading below 1, he like the last thing he will do is sell Bitcoin to pay dividends. Before that, he can do some basis trades and maybe some futures and all. And but if nothing is happening, then he's open to sell Bitcoins. There was a recent video of Sailor where he talked about this as well. So this thing is also I mean, this thing is also can be taken care of. So yeah, this was about the article of B minus issuer rating. If there's any doubt, feel free to, or we'll go to the next STRE, the European Frankfurt.
So, and how much does strategy actually earn from the IT business?
50 million per year. It's
That's it.
like, I mean, yeah, and it's what do we say? The 50 million earned is going back into the company because of operational costs. So net
Okay, so
net
the
they are earning.
and the dividends they're going to pay are only by playing the financial games of whatever options and trading they're going to do. That's how they're going to give dividends to the investors.
So they are going to give dividends by via issuing MSTR ATM. So if MSTR is trading at above 1 times NAV, then they will issue MSTR and pay dividends. And if it's trading at below 1 times NAV, then maybe they can do some basis trade with Bitcoin and
Yeah, so
uh,
pure financial
try to
gains.
figure out.
So, okay, a
Yeah.
personal question. Do you think this B minus rating is fair?
No,
Higher or lower, according to you?
according to me, it should be higher because he can sell Bitcoins. Like,
Okay, but when the first sign of his selling will be so much pressure on the company that the company go down from with it. That's the main thing with selling. So his position is that he'll never sell, and that is the psychological crust of his position. If that breaks, the whole company can break.
I think narrative has to be built that even if I sell Bitcoins for issuing 10% dividend, that is not causing like shareholder dilution or Bitcoin per share dilution in the long run. In the short run, yes, but in the long run, absolutely not. Because let's say he raises $1 billion via preferred, and he has to pay 100 million per year, right? So 100 million today will be 100 Bitcoins. I mean, just hypothetical calculations. Like let's assume Bitcoin, or maybe like 100K, then 100 million per year will be 1,000 Bitcoins. So yeah, so today sell giving $100 million dividend will be 1,000 Bitcoins. Tomorrow it will be maybe 500. In the third year it will be 250. Fourth year. So I mean this is hypothetical calculations based on what Bitcoin price you predict, but this is how the long Bitcoin and short fiat games works because the dividend is based in dollars, not in Bitcoins. So as you go forward into the future, the number of Bitcoins that needs to be get sold decreases over time. So that's
Oh,
why I think the rating should be much higher than
yeah, but
maybe.
again, you're wholly dependent on the Bitcoin price in fiat. So what if there is a very long-term bear market for Bitcoin in fiat terms?
Yeah, then it's going down. Then it's not working.
And one more question. So let's say because of the B minus rating, the categories you told me from 2.9 trillion, he has the market for around 5.2 trillion, right? And what if due to the
Yeah,
bear market, the ratings goes low? So S&P says that no, the ratings have to come down to C or D, whatever it is. So the sell
yeah,
pressure from these 5.7 to 5.2 trillion, they have to, these institutions have to sell these shares because they have down in the category, right? They can't hold these
yeah.
shares.
True.
So
Then
that will be a
everything plays in like negative feedback loop. So now it's positive
exactly,
feedback.
yeah.
But when this thing happens, everything plays in negative feedback loop.
Yeah, and you still think it should be higher, A at least.
Yeah, from my perspective, because you have to see like the total number of Bitcoin holdings. I mean BTC rating. Let's go to BTC rating. Uh, yeah.
See,
The,
and let's look at what the market does, right? If you look at the market right now, uh,
yeah.
most triple B minus US dollar triple B minus rated bonds, I think they are yielding about 7% right now.
Yeah.
So, and anything below that would, to if you're rated below that, then I think you will have to pay even higher basically to get your issue through. And
Yeah. Yeah.
Sailor has got all these issues through at 8%, 7%, 10%, 12%, about
12%. Yeah.
80% the highest, right?
Yeah.
So
Yeah.
if he was triple A rated or A rated, he wouldn't be a fool to go out and issue such high yield also, right, on these
Yeah.
bonds.
True. True. Absolutely.
So it's in
Yeah,
line,
but
not anything ridiculous. It's a rating. I think
but
market gives them. I mean, I think it's a deserving rating. It's not.
But no, Finning, but do you think this is a parallel to the 2008, the real estate, the financial sector was playing with real estate, the same thing with the rating and the financial instruments which were done during those times? Don't feel that?
No, I mean that was much bigger, right? This one is still, I think, it's not very as big.
See,
I mean,
I will answer this question, your Apaluk. Now the leverage which we think is too high, it's really not. Like we think that these financial games are played at very high leverage, but as you can see here, the BTC rating for STRD is 4.5 times. What does this mean? This means that if they have issued $1 billion of STRD, they have $4.5 billion of Bitcoin backing it. Like it's highly over collateralized. And even if Bitcoin crashes to 50,000, then also STRD BTC rating is two times over collateralized. You can't find any when you go out in fixed income markets, you will not see this over collateralization. Maybe Finning you can add here,
No,
but
no,
as far as I know, this over collateralization is not there in other fixed income products. This level of over collateralization.
got it.
yeah, I
Yeah,
mean, my biggest concern
maybe.
is with this strategy is always one thing, right? Preferred shares that is issued, paying 10% for perpetual preferred. Uh, I don't think bitcoins. Right now we have a CAGR of 60%, 40%, whatever. I don't think even if you look as per power law, Bitcoin's end state will be guarantees a greater than 10% raise or anything of that kind, right? Uh, yeah, I'm just unsure. Like, yeah, that 10% year on year for life. I don't know how long he'll be able to meet that. And
Hmm.
his strategy of saying I'll sell equity to buy more. Yeah, I mean he can sell Bitcoin to buy his equity. That's something he can do. Uh, but again, all that is, uh, you know, I think it will be nice to run some numbers, on his balance sheet, simulated some simulations basically, rather than just
Yeah,
giving.
yeah, yeah, exactly. That
Yeah,
will be much more helpful.
point blank. These are all point blank estimates, right? It will be good to run some simulation. It'll be interesting to see how the balance sheets look.
Yeah, and can you make a domino effect if something goes wrong? So let's say he starts with selling some Bitcoin to have the dividends for his customers for the first tranche. What dominoes can fall to make it not viable for the company? That side of a simulation or on the upside also. So what goes right and the company is just unstoppable. If that side of simulation, if you can do something to make us get the upside and the downside of what exactly he's doing.
See, the domino effect really depends on market. I mean, how market will behave when seller sells. So, I mean, how can I figure out like how market will behave?
Yeah,
I
there
mean, this
might
is
be some
a
historical precedents for other companies playing the same game. So I think so parallels for the petroleum market from 2020 or 19 or the real estate from 2000. These are the same derivatives games they were playing. Nothing different. It's just that he's doing it with, there's only one player,
Yeah.
strategy who's doing it at a large scale. In 2008, almost all the financial sector got into the game, but it started with Lehman Brothers. They were the first to do it. Actually, that's why their balance sheet got so out of hand for playing these games. But again, I'm not sure, but you can go ahead, no problem.
What I personally think is like this game will be only on over collateralized, um like always whenever a company is issuing any preferred or like raising some debt, it will be over collateralized because of Bitcoin's volatile nature. And unless and until this remains, unless and until we get a product which is under collateralized by Bitcoin, till that time I will say that this thing is going good. Like it's not a very huge amount of leverage. For example, in Gurgaon, let's say you want to buy a flat. You might have heard that the 100 crores of flats in Camellias and all. So this is crazy level of leverage. So if you want to buy 100 crore of flat, you have to just pay 1 CR to earn some, like, to get that paper which says that you own that flat or you have the selling rights of that flat. So because of this this kind of thing, I think this gets over like highly over leveraged system. What I am seeing here is like it's like decent leverage or maybe under leverage as well. Dhruvil, do you want to speak something? I think
Yeah,
something.
sorry.
I think
Yeah,
there's only one thing we can do, and which is basically, forget simulations and all that. Let's not complicate this, right? We know
yeah,
his average cost of purchase, right?
yeah.
Where is his average cost of purchase at the moment? Is
Uh,
78K,
Around
80K,
70, 40, yeah,
Yeah, yeah, it's
74.
78 or 79. Yeah, 78 or 79.
or 75? I think a little lesser. I don't know. Just check what it is.
Yeah, his tweet, he did the tweet yesterday or day after day for today. So in that tweet, his average price was at 78 or something.
Yeah. What we should
Yeah,
do is,
74, 78. Yeah.
yeah, just push the price to 70K, right? For now, or 70K, let's say at the end of 5 years. Two scenarios. One is 70K now, one is 70K at the end of 5 years, right? Which is even more bearish. Uh, 70K now, I think, is also a good depiction, right? At 70K now, he should be deep in trouble. Okay, the equity holders will have nothing left. Uh, if that price is touched right now, basically there should be
If
nothing for the equity holders. For debt holders, there will be promise of coupons. Okay, which are
70K
again,
happens, then
yeah. Yeah, for the debt holders, again, converts are not going to convert because Bitcoin price is down, and then because of which MicroStrategy price is down very a lot more. So you don't have to be worried about the converts. They might have some coupon, might not have a coupon, mandatory, not mandatory. Again, you need to check. But even if they are, I think they were issued at really near 0%, right? So converts are fine. The debts, the other debts, it will be, yeah, there is no way he'll be able to pay their coupons. They're also going to trade deep down below, like much like distressed debt. The prices will fall like in line with their equity. Then he won't be able to raise debt or equity anytime soon. Then the question is, will he be able to hold on for 5 years? Right? Because a lot of those converts mature in 5 years. Some of those debt mature in 5 years. I think I'm not sure if they're perpetual, then they're not maturing at all. That's the kind
So
of thing we should look at and
yeah,
see.
true. And Vinay, one more thing. IMTAB, is he had his has Sailor said anything about his contingency plan if there is a hard fork? So what will he go
not
with?
here.
So let's say if 2017 a strategy was there, what would have been his strategy? What any contingency plan with if he was going with Bcash or he was going to with normal Bitcoin? Because most of the majority players, more than half the network went with Bcash, even if they were not, So was there any plan? So this attack factor, is there any contingency plan for that also?
Yeah, this is a risk when you are considering, like when you are investing in equity. Like when you are investing in any paper Bitcoin stuff, like even ETFs, even any other Bitcoin derivatives, I think this is a risk because they have the power to decide which chain they will support. So yeah, this is a risk. But Fineng, to your question, I was doing some math. Let's say Bitcoin goes to 70K after 5 years. Then the market cap will be, let's suppose their Bitcoin holdings is 640 billion. Their market cap, like, sorry, 640K Bitcoins. So based on that, the BTC NAV will be 44.8. So let's say 44 billion. And the total number of shares as of now, maybe I have calculated according to now, like shares based on today. So let's say shares are 284 million. Then the share price like will be at $157.
Mhm. Down from where to where
230.
it's going to come down? 230 to 150.
30. Yeah.
150 for uh,
But
uh,
you have to also consider
Let me.
the fact that, I mean,
But
how is he going to pay dividends? Like,
yeah,
yeah, in this
it
case, he
won't go
will have
down
to sell
for share
bitcoins and
value,
number
right?
of
But
bitcoins.
AMDA is the stock prices all through sentiments, right? It's not necessarily one-to-one ratio that if I have that this much Bitcoin, the share price will be this much. It's all about sentiments. So even if you have, so there are companies which were robustly working properly, but because the sentiments were low, the share price tumbled drastically. Even if the company was doing very nice according to the financial sector. So that has also has to play in it, right?
Yeah, maybe the NAV can go to point 0.5 as well.
Oh, no, no, it will be at a discount, damn tab. There don't no doubt about
Yeah,
that. Question is how much
no
of
doubt.
a discount is what I'm thinking. It could even be 100% discount, like zero wiped off, right? Equity holders have nothing, little left.
No confidence in Bitcoin. So why would the share price be connected to Bitcoin
Yeah,
price?
I mean, if you're holding on to a company with a bunch of bitcoins and the cost of your average cost of purchase is higher than what the current market price is, then why will there be any value in it, right? Except, yeah, you have a bond market which you need to service over the next couple of years, which I mean, you have not defaulted on anything, but I think your equity will be near zero.
Yeah, exactly.
Yeah.
Equity price is all about market sentiments. It doesn't matter what assets you have or how the company is functioning. It doesn't matter.
Yeah. So basically, when I mean, how I see these things, like, or how a person who is investing in an MSTR sees this is like, he is not expecting $70,000 price after 5 years. Simple. This is a leverage position on Bitcoin, as he's seeing this MSTR position as leverage bet on Bitcoin. So anyone who is investing in Bitcoin treasuries, he is taking a leverage play, hoping that Bitcoin will
So
be at maybe 500, 600K and MSTR will be like much more
yeah,
outperform Bitcoin.
yeah, but that's what I'm saying. So he can do whatever he want, but with S&P and Moody's, these are people trust them. So I think so. The unrated thing is should continue for at least till Bitcoin has a proper foothold in sovereign nations. Other than that, I don't think so. Going it to B minus was not a good idea according to me. Keep it unrated. Let people take what risk they want with unrated. But B minus, it solidifies people, and if something goes wrong again, the 2008 scandal will come out. How can you give these ratings to these companies?
I mean, it's their thing. I can't comment, but I think because of this over collateralization, I think this needs to be like rating should not be B minus. And I absolutely agree. According to their current criteria, as Winning was talking about, it's justified. It's justified. So maybe whenever Bitcoin's volatility comes down, and maybe they like some changes happen in their understanding, maybe at that point in time they can change and upgrade the rating, or yeah, whatever things can happen.
Guys, I'm sorry for barging in, but
Yeah.
like I sometimes feel that this club sort of becomes a conversation between Alok and you. And I personally think that's not the best use of our time. If Alok feels that these securities should be unrated or these are like spam, that's all a legit feedback. But we should not like devolve into that conversation itself at every step of the way. So that's what my feedback is. If we can take those conversations like offline maybe or after the discussion after the session is over, we can have a time for discussion on them.
Yeah, sort of noted. I'll keep it down. No problem.
Yeah. I think
Just one thing to
it's
add,
it.
guys, there. We've been
Yeah.
talking B minus for a while. Just to give you a sense of what the market expects, right, or what S&P expects from a B minus rated bond is, they expect them to go default. It's basically an indication of default risk, right?
Hmm.
And they expect the company to go default 7.5, anywhere between 7.5 to 20% for B rating in general over the
Okay.
next couple of years, over next many years, basically. We might have to look at it, but yeah, so basically somewhere in the range of 10 to 15%, let's say, right? One in
Yeah.
10 or one in 6 odds of it going bankrupt in the next 10 years or so, or so, right, on that, on those nature.
To add to this point, they have also, like, in the end, they have talked about this, like, strategic access to capital markets is impeded either due to a market deterioration in Bitcoin valuation or for any other reason. Or we believe there is increased risk that the company will not be able to manage maturities of the out of the money convertible debt. And then the next thing which they talk about is an upgrade, where they say it's unlikely in next 12 months. Over the long term, we could raise the ratings if we expect the company to improve US dollar liquidity. I don't think this is happening. Strategy reduces its use of convertible debt. I think in the long term it's happening, like they are transitioning from convertibles to preferreds. And the third point, the company continues to demonstrate strong access to capital markets even during a Bitcoin stress. So next bear market is a thing to watch. Like what happens?
I think they have missed one important criteria. If the Bitcoin price rises sharply, the whole scenario changes. There is every reason for strategy to, and if they don't issue more debt, there is every reason for strategy to get a good upgrade also.
Hmm.
The further he moves away from his weighted average cost, in my view, he starts commanding a higher rating.
Yeah.
But then if he keeps buying the top, it's harder to achieve, right? Uh, so in the end, he has to find a solution to this infinite money glitch, right? But let's see. It'll be interesting because yeah, if the price goes to 150 and if they haven't, if no, if they're still at 175 on an average purchase cost, they're actually pretty comfortable, right? They can actually, all those matrices will look better. They're much better capitalized. Their equity is much better. The debts have pretty much stayed the same. A year has passed, right, since everybody expecting this. He'll be pretty well positioned to ride the next cycle.
Yeah. And I think here maybe we can take STRE in the next session, like next Tuesday, because it's 9 already. And maybe we can open floor for chat, and Jatin, you can stop recording. Yeah. Sagar, you are unmuted. Go on.
Yeah, sorry. So I was on the STRE. What is the tax implication for Indians, right? If Indians want to buy STRE
So
stream.
this, like, I'm not sure, like, really sure about this, like how this will work. But as they have mentioned, like, if you want to tell me what Sailor has mentioned, Sailor has mentioned that they